Good morning. Good morning. Good morning. Hopefully you guys are having a good day today. We're going to be getting started here. It is Thursday. It's going to be a good day. Let me close my door. I kind of jump into streaming and I don't realize that I'm not completely set up. So, how are you guys doing today? How is your day going? Good morning, IF. How you doing, my friend? Glad to have you. Where are you from, IF? What part of the world are you streaming from? Where are you watching from? Oh, I forgot we're on there. Screen. Let's switch to the charts. All right, we got about 9 minutes before 9 minutes before open. Now, today's a unique day. We have news today. We had news at 8:30. We have news at 9:45, and we have news at 10. Mexico, awesome. Glad you're here, man. So we have news 3 times this morning. However, tomorrow we have NFP, non-farm payroll, which is a big news event. It typically moves the market quite a lot. Part of ICT's recommendations is the day before NFP, you should not be on a live account. So we have right here, pretty clear and large that we should be on demo or eval only. Now, this is your discretion. I'm not going to be. We have lots of news today, and I think price action could move quite nicely. So the way I'm going to capitalize on it is I'm going to be using a new eval account that I opened, and I also have just my personal account that has a few $1,000s in there that I only trade one micro account typically on that. I did that months and months ago until I switched over to using evals, and I really haven't traded it, and I decided, I'll do one micro account on that account, or one micro contract on that account. So I will be doing eval and a cash account with only one micro. So my risk is very small. If I'm going to have a losing trade, usually it's 10 to 15 handles. I'm risking $20 to $30 on that. I do very small amounts on that. The main reason is if I can increase it, great. If I lose a little bit, it's not that big of a deal on a day like today. Now, if we look at today's price action so far, we have reached the breaker in OB that I've been referencing multiple times. We're just shy under it. We're just shy, but if you look left, you can see that if we go to the low of this down move, the end of this down move before the retracement, and we just drop a line on there, the low hit here. We can see that we've ran into that low from, what would that have been? From July 19th. That's the low from July 19th. Now, we're on the 15-minute chart right here, and we reached all the way to there. Let's drop to the 5-minute just to see here. And what we ran was 5-minute highs. We have these 5-minute equal highs right here. We ran those. We ran them to the tick. Or not to the tick, but basically by like 5 handles. We ran that. And we have some liquidity up here that I don't see why we shouldn't run and grab that unless we're really heavy. We have a lot of news that's going to be happening today and tomorrow. So really anything is possible. I'm not betting on one way or the other. We have created a high, and we have already, look at this nice breaker right there. Isn't that really nice? That's really nice. That's a nice breaker right there. After that move, look, I want you guys to see this here. We have our high, low, higher, high. We have a very aggressive move lower. And then the first time it comes back up into it, drawdown would have been 7 handles, 8 handles. But then you would have had a very nice move lower to this swing low right here. That would have given you, if you were to get in long right when we hit, oops. Wouldn't have ever hit my 10 handle stop loss, and our target would have been that low. That's 26 handles on that initial breaker right there. Now, that's a nice breaker, especially because of this move right here. This is what tells me that this is going to be nice. The displacement on this is obvious. Good morning, Mags. How you doing, my friend? Glad you're here this morning. So it's pretty obvious. So we have seen on the 15-minute, even the 1 hour. Let's go to the 1 hour here. We've seen a market structure shift with that large down move right here. So here's our hourly candle. We displace below that. And we're now sitting at this, the mean threshold of this order block in the middle of this range. Now, we could see a market maker sell model begin to play out. That is an absolute possibility. We got 2 minutes before open. And because I'm doing eval, we should be live on these accounts, or you should be able to see those trades. It's not up yet. So we got a lot of resistance right here. This was the end of day yesterday. So I really want to see, are we wanting to run through yesterday's highs? We also have, where's our opening price? Opening price is right here. Midnight open. And we're closing relatively close to where we're opening in 7 seconds. So you'll see here, there's the opening range gap, really small. We'll probably just go up and tap that real quick. That's my guess. So really small. We don't have an opening range gap here. We are heavy. We have this breaker on the regular trading hours that's sitting right here. High, low, higher, high. Maybe we come down here and come back up into this level. That would be really nice. That would be a nice move. And then we move lower. I'd be interested in something like that. Let's go to the regular trading hours here. And it might already do it. Might do it right off the bat. So we have news at 9:45 and 10 o'clock. If I talked about yesterday focusing on the fundamentals, In my mind, fundamentals are patience and discipline, and being patient and disciplined in waiting for news to play out, letting the news come in, do what it wants to do, and then begin to look for a move. So if discipline requires you to get off and come back at 10 o'clock, then that's what you need to do. I would wait until news takes place. That is one of the foundational things that you should be doing. You can make trades before then, but you are going to get a lot more wiki action. You're going to get potentially price disrespecting some of these PD arrays. I mean, look at this for example. We swept these lows right in this candle. We closed above this inversion, yet we never grabbed these highs, but closed below it. So it disrespected this first inversion gap right on the open, which is indicative of a disrespecting price action right before news. So we have these equal highs that we just swept barely. That's still not enough for me. We're also in the middle of a range. We're halfway down this. We're halfway down this range. If I look from this swing low to this high, we're literally sitting at equilibrium right now. So we're not in a place where it's ideal situations, and we have news. So I want to let this play out. I want to figure out what direction we may want to go as news gets closer, and then we'll decide to pull the trigger where we want to go. That's the best approach in my opinion. Now, if you're watching this stream, I'm assuming you care about my opinion here. So we are going to play it safe. We are on demo or eval only. I'll be jumping on an eval account when it pops up. Sometimes it takes a minute. Still nothing yet. Now, those of you that were on yesterday, when I got off, how many of you were done for the day, or how many of you went back and continued trading? So far, my analysis has, honestly, it's been on point. I expected price to run up to the daily, right? Here's our daily fair value gap that I've been referencing over and over. I thought that we may reach the consequent encroachment. I thought maybe we could push all the way up to the breaker. I said maybe it doesn't have the energy to do it. We've hit the consequent encroachment. On the daily, we closed below it. So that analysis was on point. We hit the consequent encroachment and we called it a day there. That's basically what happened. We hit the low, or just under the low, hit the consequent encroachment, and they called it a day. So we ran all that liquidity sitting right here inside this daily fair value gap. To me, that was a no-brainer. I knew that was probably going to happen. It's just a matter of when, and that just takes time. I was saying on Monday I wanted to see that happen. So Monday, Tuesday, so I was 2 days off. 2 days off. Even here when we were at the lows, I was still calling it. Because that's just order flow. Price moves from external liquidity to internal liquidity. That's just how price moves. What does that mean? After price runs a swing low, for example, right here, this is a swing low, okay? after price runs a swing low, it will go back into the price leg that created of that previous low, of that leg right here. So a price leg is a swing high to a swing low. Now you can have larger price legs that include multiple swing highs and multiple swing lows. So this is considered a higher time frame price leg, but you can also look at this in the smaller sense of a smaller time frame swing low. This high to this low, if you were to break it, go down to the 4 hour, it would be even more clear, right? Let's drop down to the 4 hour. Okay, so this is an obvious swing high to an obvious swing low. And so when you see price run that swing low, as we see right here, typically we will call this external liquidity, meaning it's running this low and it's external of this price leg, meaning the price action we see down here isn't affecting this price leg. It's in direct correlation to what we see to the left. So this entire move is inside this higher time frame price leg right here, right? So this is a price leg, meaning it's being affected by it externally. So when price runs this external high or external low, or what we call ETH, external liquidity, ETH, or is that, what are the letters? I might be getting those letters wrong. It will then turn around, typically, unless price is really moving to a specific place, it will run towards internal liquidity. So external liquidity grabbed. Now where's the internal liquidity? Internal liquidity is sitting above these highs and rebalancing this price leg right here. So I didn't care how low it went. I was confident that at some point we're going to be going up here, and that's exactly what happened, because it ran the external, then it turned to run to internal liquidity. Now the next question is this: does price want to continue higher or does it want to continue lower? If it wants to continue lower, then it will run this swing low down here. If it wants to move higher, it will run internal liquidity again to the downside, filling in balances, and then turning around and running higher and potentially grabbing this swing high right here. So we're at a spot where, especially with NFP tomorrow, price could have a reason to want to run back up to all-time highs again. Or maybe it wants to dig deeper into this price leg that it created earlier and rebalance some of these areas that are up here and then continue lower, right? Ultimately, I think we are moving lower. Ultimately, I think we're bearish on a higher time frame. But today is also the first of the month. The first of the month, you got to look at it as the very first week or the very first day of the week. What do you expect? You expect consolidation, you expect manipulation. So we could see some type of manipulation move in the first week of August. That means we could see higher prices if we are heavy. There's so many different factors you got to play into. We are towards the end of the week of this week, but also the first of the month. So you have overlapping analyses that can conflict with your overall consensus. So you just got to use common sense. What do you see in the charts? What makes most sense? And let's make an analysis based on that, okay? So all that to say, we still have 5 minutes before 9:45 news, and then we have 10 o'clock news coming. We did sweep these lows of these down closed candles on the 1 hour chart, and we're very bullish, or we are seeming to be bullish with 18 minutes left on this hourly candle, meaning we may want to reach up for this breaker in this order block. We still have this upper half of this fair value gap that is still unfilled. We may want to actually fill that up. We'll see. Chart trader, hey my friend. I don't think I've seen you on here before. Welcome. Glad you're here. One morning, one afternoon win. Congrats. We're seeing some acceleration here. This is a nice move that took place. We didn't take it. I was obviously talking, and if you're annoyed by that, I apologize. I told you I was not taking trades. This is a beautiful trade right here. I say beautiful as in, if I was open, if I allowed myself to take a trade, I would have taken this. But I already told myself I wasn't going to do it, so I wasn't going to tempt myself by looking at the charts and trying to, decide, do I really want to take this? Do I really not? Right? Look at this. Look at that beauty, man. That's nice. That's a nice close. It had nice momentum. It closed above it. It ran the highs almost immediately in just 2 minutes. Actually, in 1 minute. You would have had, that's a nice trade. That's a nice trade. You would have had over 20 handles in 60 seconds on that trade. On your first take profit. You wouldn't have even been stopped out because it never came back to stop you out, and now it's running. It looks as if it's running for these equal highs. We'll see if it wants to continue or if it's just running for these equal highs sitting right here. So we have these equal highs that were sitting right there. Equal highs, bam, it ran it. Does it want to continue to go grab upside liquidity? Or are we going to find some resistance, or are we going to find some support there? Nick Hill, hopefully I pronounced that right. I apologize if I didn't. Does fair value gaps work every time? How can we scalp on fair value gaps if it was 3-minute time frame or a 5-minute time frame? That is a great question. The short answer is no. I made that mistake when I'm like, oh man, look at all these fair value gaps. They're everywhere. I literally started trading all of them, and I learned quickly I was losing. How do you trade a fair value gap? The easiest answer is you want a fair value gap that overlaps with another confluence or another PD array to give you confidence that it will find support at that level. What do I mean by that? Very simple. Let me see if I can see a clear example that would articulate this point. Man, it is really aggressive right now. It's probably going to run to these highs. Let's put, let me take this off. I'm going to answer that question. I just need the right example to express it. Man, it did not waste time, did it? Holy cow. 140 points. Just like that. From 936. Oh, we're on the 32nd? Shoot. Let's get out of the 30-second. I'll probably see something now. All right, here's an example for you, okay? I'll be quick because I do correct pronounced. Thank you, Nick Hill. Here we go. When I see this price action right here, okay, and I see this high, low, higher, high, and I break lower, I'm looking for a breaker. Because of this wick, it throws me off. So I go down to the next one, and I see this fair value gap sitting right here. So I see this fair value gap, price comes into it and moves higher. We now break below it. I'm now seeing this as a breaker. Look at this. Those equal highs that I just marked out, this high lines perfectly with that low to the tick. To the tick of this down close candle, that's a breaker. Now look what it closely overlaps with. What do you see in this price action right here? If this is the breaker I'm referring to, which is another PD array, which is a confluence that you can use when identifying fair value gaps, what do you see? Look at this fair value gap right here. It's small, but look at it. What do you see? It disrespects this, but if you were to go short based on this, your stop would have been at this candle's high or the next candle's high that created the fair value gap right here. Oh, I'm sorry, that's the wrong way. If you went short in that fair value gap, your conservative stop is there. Your aggressive stop is here. Conservative stop is there. Why? Because this candle is the one that framed the upper half of the fair value gap. Your aggressive stop is this candle, the actual candle that possesses the fair value gap. So you can see that this fair value gap overlaps with another PD array that I use called the breaker. When you overlap PD arrays with your fair value gap, those fair value gaps become more reliable that you can count on. Now, whether it's the 1 minute, 2 minute, 3 minute, 4 minute, 5 minute, 10 minute, 15 minute, all of them act the same. You just want a PD array on the same time frame that you're using to target, okay? It's just easier when it's on the same time frame, okay? That's one way you use fair value gaps, okay? The next way is when you're in momentum, when you have momentum playing out, okay? What do I mean by that? Let's see if we can see an example, okay? Here's another example of a breaker. I'll just show you this real quick. Look at that fair value gap. Okay. We have a fair value gap on the left. We have a high, low, higher, high. If you take the low of this candle, what does it overlap with, or what is it close to? It's really close to this fair value gap. And just look at what wicks right into it. This candle right here that wicked into the fair value gap, but also opened right at that swing low. So that is a fair value gap overlapping with a breaker. It's one of my favorite setups. It really is. It's one of my favorite setups that I see all the time. I've gotten comfortable with using inversions because I can move my stop to break even, which we can go over that here. All right, there's 850. Here's some displacement. I'm liking this displacement. Let's look at the 5-minute here real quick. All right, so here's the thing. If we close here in 3 minutes, we may start moving lower. But because of this 5-minute candle running into a 5-minute fair value gap, I'm going to wait for the next 5-minute candle to close. It could be about 10 minutes to verify that we want to move lower. That will allow for a potential breaker to set up, as well as a market maker sell model to form out, if that's in fact what we want to do. If we don't, and it wants to just continue to move higher, well, and it decides to inverse this fair value gap right here, we're not going to take it because we already ran some highs. Okay, I don't want to take that risk that price is going to continue higher when we've already grabbed liquidity, we have more news, and we have NFP tomorrow. Okay. Nick Hill, I'm trying to use fractals that forms on smaller time frame using fair value gaps on bigger time frames. 100%. That's great. Say a fractal uses on 3-minute time frame for 15-minute. Okay, so what you're doing, you have the right idea, but not the right PD arrays, not the right understanding of it. You're moving in the right direction. So what you're talking about is you want to see price action show you something on a higher time frame, then you go down to a lower time frame to confirm it, and then you take your trade. You want to use a 15-minute time frame with the 1-minute time frame. Okay? What I'm referring to, hang on. I want to see if this is what this is going to do. I'm watching this low candle right here. I want to see we've got 44 seconds left, but I'm interested to see if it actually closes lower. If it closes above here, we'll probably run these highs. That's 8 handles. It's a little small for a move. But I'm going to finish explaining that 15-minute to 1-minute time frame here in a second. So on my chart is going to be the 15-minute time frame. Okay? You want to find on the 15-minute time frame the candle either running liquidity or filling a 15-minute fair value gap. Look at this candle. Look at these candles right here. Okay? We already know this is going to play out because I have the line here. I remember that it was the breaker. Okay? Look at this 15-minute time frame. We have a high, low, higher high. When we come lower, as soon as we come up into this 15-minute breaker and or this 15-minute fair value gap right here, and or we run this 15-minute liquidity sitting right here. Do you see how I just showed you 3 things on the 15-minute time frame? We have this breaker, we have this fair value gap, and we have these equal highs sitting right here. Now, if we were to go down into the 1-minute time frame, that is how you refine your entry. Your idea is, hey, I have all of these confluences. I have this fair value gap. I have these equal highs. I have this breaker. This is too big of a spot for me to go short on. This is literally 20 handles. I don't want to have 20 handles of risk. What do? You go down into the 1-minute time frame and you look for your opportunities. Okay? So we have the breaker low sitting right here, right? And what's right above it? We have this fair value gap here on the 1 minute. and we have this fair value gap here on the 1 minute sitting right above it. I would be watching both of those. Okay? We have the equal highs sitting right here. And then what do? We run it. Okay? Now, the next thing that you need to consider when I'm looking at where do I want to take my entry? Is it this fair value gap here? Or is it this fair value gap here? Well, we don't know. So the next thing that I would recommend is either looking for a 5-minute or 1-minute change in state of delivery. So let's say we just do the 1-minute change in state of delivery, meaning if we have a bullish candle, we're waiting for a bearish candle to close below that candle. We would look at this right here. We would say, this is bullish, I'm not going to take it. This is bullish, I'm not going to take it. This is bullish, I'm not taking it. This is bearish. Technically, I could take it because we closed below the low, but it has a very large wick. Let's go to the next one. So I'm going to go to this low, and I'm going to wait for a candle to close below it to confirm that price wants to move lower now that we hit a 15-minute fair value gap, 15-minute breaker, and these swing highs. So what do we see? As soon as price closes below here, that tells me I'm going lower. I have an opportunity to go short. So you could go short right there on that close with a reasonable confidence that we are going to run at least this swing low or this swing low here, and that's what we do. There's 20 handles if you would have done that. So you're using higher time frame analysis, higher time frame PD arrays to give you an idea where you may find resistance, and then you do almost the exact same thing on the lower time frame, looking for lower time frame PD arrays to overlap to give you the confidence that it's going to move in the other direction. That is how you want to use a 15-minute to a 1-minute. You just don't go from a 15-minute fair value gap to a 1-minute fair value gap or a 3-minute fair value gap. You don't want to do that. That will cause confusion. All right, let's go back here. We made a higher high. If we are going to see lower prices, what did I say? I wanted to see on the 5-minute, we had a 5-minute close, but I told you because of this fair value gap, I wanted to wait for the next one, because many times you start seeing this price action after when a 5-minute change in state of delivery right here. This is the 5-minute change in state of delivery. We went higher, we ran the swing highs, and we closed below the opening price of this candle that ran this swing high. To confirm that we want to see lower prices, I want to wait for the next bearish candle to close lower, and that would be my confidence that we're going to see lower prices. So if this closes green in 20 seconds, I want to see the next candle close below this level right here. That's what I would want to see. Doesn't mean I'm taking my entry there, but it's giving me confidence that we're actually going to see lower prices. So, Nikhil, I don't know anything about Williams fractals at all. I don't. I trade ICT. That's 100% what I do. I try to make it as simple as possible and simplifying his concepts. And that's what I did. I'm assuming you watched the ICT fair value gap video that I recently put out. Is that the case? Okay, so do we have this green closed candle. Now we have to wait 5 minutes for this one, but it may be too aggressive. It may be too aggressive to where it starts closing too fast lower that we can't wait for this 5 minute right away. It may come back up to it. That's what I'm going to plan on. I'm going to bet or guess that if we do see lower prices, this will be really close to where a breaker will be. I'm not saying it will be a breaker because it's not a swing low. That's obvious. It's not a swing low. It's in the middle of this leg. But my guess is it's going to be fairly close to where a breaker is going to be. Could you please also help me to understand how often the change is of price coming to upper boundary, CE, lower boundary? I'm sorry, I'm not understanding. Can you reword that for me? Could you please help me understand how often the change is of price? That's the part I'm not understanding. Understand how often the change is of price coming to. Yeah, let me know what you're saying. I'm getting a picture, but I'm not quite there yet on what you're asking. While we're still here, let me see if I got my eval up yet. There it is. All right. We are eval live, folks. Eval live. Demo eval only. We got NFP tomorrow. So if we can get some money out of our eval account, that'd be great. Not sure if price wants to move lower or not here yet. I'm seeing back and forth price action. This could turn into some consolidation here. We just had news 3 minutes ago, so we have the green light for some trades, eval trades, demo trades. We have NFP tomorrow. Nikhil, I'm not 100% sure what you're referring to. If I think I know what you're talking about, let's use this fair value gap as an example, okay? This fair value gap, if we want to see higher prices, ideally, we want to see price respect the upper half of the fair value gap. This is some aggression. Hang on. I want to see if we got a 30-second in here. We don't have a 30-second. We had one just close right here. We're probably going to run those lows. I'm going to see if it happens here. This is just a quick... I'm expecting it to run these lows right here. But I just mentioned we're in consolidation, so it could do some manipulation stuff and not. We grabbed these highs, we ran this 30-second. I'm looking to see it run these lows right here. If it gets stuck, you want to cut the trade. The reason why is if we're in consolidation and it doesn't want to run those lows, it could be very quick where it doesn't run those lows. There it goes. All right, 62 ticks right there. All right, that was a little quick. Do you guys see what I just did there? I saw the 1 minute. This happens all the time. I saw the 1 minute. We have this large green candle. We have followed by this large red candle, black candle. Well, this is a larger time frame. I have a lower time frame, and my guess, I was guessing that there was going to be a fair value gap in here that was inverted, but with an inversion for an inversion play. So I dropped down to the 30-second, and what did I see? I saw this single fair value gap right here. There's a very, very, very small one. Let me get rid of some of this stuff here. There's a very small one sitting right here, but that's irrelevant to me. So as soon as I saw this was already closed below and we had a lot of room right here, over 15 handles. That was enough for me to say, all right, news is done. We swept these highs right here. We could run these lows. And that's why I took that entry. All right, so now we have a close below on the 5 minute. You see this right here. Let's go back to this right here. Right there. I want to see, I would love to see price come back to this level right there. That's our change in state of delivery. We know it's already happened. Now we see I would love to see price come back up to this fair value gap here or the one below it. This one right here. That's what I would love to see. It may not do it. It looks like it's moving pretty quick here. But if we could get price to come up, I mean, even I'll probably be okay with this fair value gap too. We have this swing low, high, low, higher, high. It's a breaker. We could see some prices. So the 5 minute is going to be closing here in 2 minutes. If it closes below this fair value gap, we may see some lower prices depending on today. I'm just not as certain because tomorrow's NFP. Here's that retracement I'm talking about. We'll talk about that later here. Let's go on the 1 minute here. I like this fair value gap. So this is the overlapping fair value gap. We'll see. If we truly are bearish, we should see a change in direction to go lower here. If it's too heavy, then it may not reach up here. But we're gonna take a stab at lower prices. We have not. Have we reached all the way down here yet? Breaker. Yeah, my only concern is that we have relatively equal lows. I like that. I like these relatively equal lows sitting right here. So if we can get up to this level, I'd be interested in going short. If it goes without us right now, there's a swing low right there. We could play this inversion sitting right here as soon as that candle closes. All right, that's probably close enough. I looks close enough. Did it close? It did not close. So I'm in an illegal trade based on my entry strategy. It looked from where I was at that it closed below, but it did not. It was off by a tick. So we're going to see if we can get this to push lower so I can get out. It has the momentum. But it could do just that. This is why you wait, guys. Does that make sense? This is why you wait for that close, because if you're like, oh, it's gonna close and you get in early, or you think it closed and it didn't, it could do this to you and destroy you, especially if you have a tight stop loss. Okay, so obviously it has not closed yet. Okay, there's the close above. That invalidates the trade idea. You should be getting out. I'm just going to see if it pushes lower. If this candle turns green, I'm closing the trade. I'm going to move my stop to break even right now to protect myself. And there's my stop out. And I got out of that trade with no scars, thankfully. Film verse. Mate, when you start this session, I mean, how much before this time? By the way, hope you're doing good. I'm doing great, my friend. Oh, yes, I see the time. Sorry, my mistake. I'm not sure what that's referring to. I'm still waiting. I still think this is a valid trade idea right here. This only works, obviously, if we do want to run these equal lows, but I do like them. I'm not going to lie. I think that is very obvious. That's too smooth. Too smooth. Price does not just stay like that. No, it will be, price will become, the algorithm will make this smooth area jagged. It will come in and disrupt the smooth level. I'm just hoping that it wants to get up to here or potentially here for my entry. That's what I would be looking for. There are no books, Nikhil. There's zero. ICT has his first book coming out. I don't know when it's going to be available, but he's writing a book. He's written a book. He has 4 of them, I believe. 3 of them is on technical analysis. And so when those come out, you can read them. But if you want to learn them in depth, the best way to learn is not reading a book. The best way is to watch ICT live trade on stream, which he doesn't do it anymore, but he has all his past streams on his channel, and then listen to him talk about fair value gaps when he does. Okay? That's the best way that I would go about doing it. But as we're waiting for price to come up, okay, while we're waiting for price to get back up to here, that's the only other idea that I'm really looking for right now. Let's go back to this conversation of fair value gaps. So this fair value gap right here was respected and then made a high. Ideally, you want to see price respect the upper half of this fair value gap. You want to see price respect the upper half of this fair value gap. That tells you that order flow is bullish. If it closes below the halfway point, it still can be bullish, but it just might not be as strong. Take, for example, an institutional order flow entry drill, which is one of ICT's concepts. An institutional order flow entry drill is when price wicks into the fair value gap by a tick or two and then explodes higher. When you see that, and then you look at this, and you see it digging deeper into the fair value gap, you can reasonably expect that the move is not going to be absolutely gigantic. It still could be, but an institutional order flow entry drill is when it wicks in just barely, and it's so aggressive, it comes down barely and then explodes higher. The deeper it comes, the more likely it's just going to run a high and then potentially turn the other direction. So it's just reading on where it's going into the fair value gap to determine what it's going to do. Now, as soon as that fair value gap is closed below, like we see right here, we now turn that into an inversion gap, and we want to see it respected. So what happens? Price comes up into it and wicks up into it and respects this fair value gap. It doesn't even go into the halfway point. I was wanting it to come up into this halfway point, into this fair value gap that's overlapping now with this inversion gap. So you can use this single fair value gap that finds support to move higher, or when it's violated to look to see it find resistance and then it move lower. And that's exactly what happened here. It found resistance. But also keep in mind, what's overlapping with this level? We have this breaker sitting right here. That breaker, it ran to the lowest body close to the tick. Look at that. That lowest candle there, the body close, or the body close of that is right here, close. Look at this number right here. The close of that is 1325. Look at this number right here. That number is 1325. It hit it to the tick. That's not by chance. That is algorithmic price action. Okay? Your job as a trader is to be able to learn to identify. Did I identify this beforehand? No, I didn't. But the more I look at this, the more I'm reading price action, the more I'm analyzing the day's moves, the clearer it becomes. And then at some point, you're going to come up sitting down and you're going to say, hey, look at that breaker. Look at that fair value gap. Look at this inversion that it's overlapping with. Let's keep an eye on this and let's see price find resistance here to move lower. And just because I've been talking, I was talking about other things, looking at other things, I didn't see that, right? In time, you will become a much better trader if you put in the work. Sitting here with me is going to be educational, but the true education and the true growth is going to be happening after the day's moves are done and you go back in price action, you look at it post-day, and you identify the potential setups that you could have taken, write them out, mark them up, take pictures of them, create your own library of all the breakers, create your own library of all the inversions, your own library of all the change in state of deliveries, and you put that together to create a history of evidence so that you can have the confidence to go short when it hits that level. That's basically what it is. This takes years. I'm a year and a few months, a year and a half almost into ICT's Concepts. I have such a long ways to go. I have such a long ways to go. But the more I'm doing this, teaching you, the more I'm identifying. If I'm being 100% honest, there's two reasons why I'm live streaming. Number one, I want to and I feel a call to educate the body of Christ. Guys, we missed this move. We don't have an opportunity here. That move was missed. So we're sitting here waiting for our next opportunity. So 2 reasons why I'm live streaming. 1, I feel a call to educate the body of Christ. Number 2, I'm doing this for me, man. The more I talk about this, the more I'm verbalizing what's going through my head to teach you, the better trader I am becoming. So if you can, talk out loud. When you're going over your charts, say to yourself out loud, okay, here's the high, here's the low, higher high. Okay, we broke lower. This would be our breaker. Here's our overlapping fair value gap. Here's our other fair value gap on the right side. We should expect price to come up into this level. There it is. That would be my entry. Stop loss at 10 handles, moving the other direction. You are actively engaging with your education by talking out loud. You're going to grow so much more by doing stuff like that. Okay? Okay, good. I do like these equal lows, guys. I do. If we can get some type of bullish move that gives me an inversion, I'll play that. There was this inversion right here. We missed. And as you go back in price action, you're going to be like, man, look at all these moves that we missed. Oh, man, there's another inversion entry right there. So inversion here, inversion there. Guys, if I'm honest, price action is phenomenal today. Price action is phenomenal. This is absolutely fantastic price action. You could almost not go wrong. Let's see if we can get price to come back up to this level. If we can get price to come back up into this level here or close to it and then is aggressive the other direction, I'll take a short to these lows because these are the obvious draw on liquidity. These equal lows are the draw on liquidity. Okay. And if you guys use Apex, up on the top there, you can use code DTJ for the best discount Apex has to offer. It rolls over whether they're doing 90%, 80%, they're doing half off reactivations or half off activation fees for performance accounts. DTJ is that code. I'm not asking you, if you don't use Apex, don't use it. But if you already use Apex, all I ask is use that code. Everything I do here is completely free education. That's the only thing that I ask is use that code, and hit the like button. All right, there's our stab of liquidity. Now that we've hit this level, we can have the freedom to look for a long. Okay? If we start seeing aggression, that would be an opportunity. And our first opportunity could be right here. Why? We grab the equal lows. We have a single fair value gap from the low that may form soon to this high. This swing high. We have one fair value gap. So it may drop and we may not have an opportunity at all. But if it shows up, and it shows right here, we're going to take that sucker. I'm not convinced we are going to get it because the 5-minute is looking quite heavy. Yeah, it wouldn't surprise me if we don't get that and we get lower price action. We get more bearish price action. Not gonna lie, guys, price action is great. I think I'm gonna add a contract. Eval, demo only. Eval and demo only. You know what's nice is when I made that decision that I'm just doing eval and demo only, man, it's stress free. Whew. It's nice. Absolutely nice. We have another swing high right here. We can look at this 30-second right here if it's aggressive. No close. This is our swing low. We could get some resistance here. This is what we want to watch. We want to watch how aggressive does it want to go through this level. These were our equal lows. Mags, are you shorting here? What is the target you're looking for? We hit the target. These equal lows were my initial target. Now, if we want to continue lower, we'll look at that. But right now, I'm looking for some type of retracement, honestly. So we have this fair value gap that has been inversed. We aren't taking that as an entry. We're waiting for this as our entry. Let's see if there's one on the 2-minute. Nothing on the 2-minute. But we really need to watch this level right here, this black line, because that's the equal lows. We could find resistance here. I'm liking where this candle closed on the 5-minute. It tells me that we are going to get some type of retracement. We just want to see if it's going to be large enough to run this swing high right here. This is what we want. I want this swing high. We have multiple swing highs. So if we can get a move through this level, that would be our opportunity. If it wants to run lower right here and it closes below this 1-minute, we could see it work out. Why? Main reason is we have these equal lows right here. It found resistance against. It rebalanced these areas. This also is considered a breaker from this high, low, higher high. We ran lower. We do have room to run lower. So we have to look at both options to figure out where does price want to move. Okay. I would be watching this 30-second for a downside move. We have these equal highs here. If this finds support here, it tells me that there could be some higher price action, right? It respected the consequent encroachment just like we want to see with our fair value gaps. I'm on the 30-second. Time frame is always on the top right corner. You'll see that. I want to reiterate again, demo only. I don't want to be a reason why people are losing money. Here's the idea I have. The idea is a close above this level. Stop loss is relatively small, 7 handles. And our target is 23 handles. That would be a great move. That'd be a great move. This is a 30-second fair value gap to the downside. So we'll watch this. If we get a 30-second close beneath it, I still think we could potentially see lower price action. I just don't know if we've hit that low. We hit a major level. This is a major level. There's our equal lows. That was my target. So that gives me the freedom to start looking for those higher prices. But we may not want to do that. We may want to go lower. So I need to have this on here because this is an opportunity. So I'm either taking this to go higher or this to go lower. And this is on the 30-second here. So it would look like this. Stop is at the high of that fair value gap, targeting these lows right here. That's 17 handles. So there's opportunities for both. Right now it looks like we may get the downside. I'm willing to take this if it closes here. That is a no close. That is a no close below. Okay, so no opportunity. And it's probably, if it runs this low, it removes that opportunity altogether. Okay, that's gone. No more opportunity there. It didn't give us the setup. The play still worked out. We just didn't get the setup. That's okay. Good morning, BF. How you doing, my friend? How you doing? The 1 minute didn't even close either. I don't think we have anything on the 2 minute. So literally, you may have had to gone down to the 15-second for this opportunity. Let's see if we had a 15-second here. Nope, we didn't even get a 15-second. There was not a single opportunity on that trade. But it is telling us that order flow is bearish. The main reason is we hit these, we could not get back up through these equal lows. It was a breaker, equal lows, delivering lower prices. We were just using our entry model as the inversion, and it didn't give us that entry model, and that's okay. You could use a different entry model to get in this if you wanted. You could have used, let's see, do we have a 30-second? You could use the fair value gap on the 1 minute, honestly. I wouldn't have done that because I've just been burned too many times. Hang on. I like this manipulation right here. So we ran the lows right here. This is an obvious 30-second fair value gap. This is an example of how you could go low. go short. You could go short right here, put your stop above this candle right here to see if price wants to continue lower. We got reason to go lower. This is the 15-minute time frame. We have a swing low here, sitting right here. That looks like it's wanting to run towards that level. And we have another swing low. If my low is not the target, we have another swing low sitting right here. Okay? So that's the other one. If Nikhil's still on here, I'm going to mention this. When I mentioned momentum, the other reason you can take a fair value gap is when we have a buy side or sell side momentum and it's clearly running towards a clear liquidity. This is. So what you do is you go short on the fair value gap that overlaps with the low, and you go short in the fair value gap. Okay? Here, this is the breaker. We go short in the fair value gap. That would have been this fair value gap right here. And you would have had to held through some drawdown, but your stop would have been above this high and it wouldn't have been stopped. Okay? So opportunities to do this, it's just going to run. I'm going to see if it wants to run right now. This is a momentum play that you should not be taking if you care about your account. I'm looking for this low right here, and then I'm going to sell one of them. This could easily run the other way, guys. Please don't think that, oh, I'm in it, that I'm going to go short. See how it's running the other direction? It's very easy. It could run the other direction. I'm doing this because I don't care about this account. It's an eval account. Obviously, I want to pass it, but I'm okay with taking a loss if it doesn't work. All right, see the aggression on that? Let's see if it wants to find resistance right here in these two down close, or this order block right here. And I don't think it does. We might have an inversion right here. Yeah, I'm going to get out of that. This perfect execution of what not to do. People do that all the time. Oh, here's a low. It's probably going to run it. Let's just get in to grab it. Don't do it. Here's an inversion right here. We could probably take that long right there. It inversed right here. This is where people start making mistakes. I'm doing this for teaching. I'm literally doing this for teaching experiences. We closed above this, but we're in a downtrend. This has a lower probability of actually playing out. But people would take this thinking, oh, it's going to run this high now. Oh, but what does it do? It runs for the initial target, guys. Do you see that? This is the target. This is the target. So people are now thinking, well, why didn't it go? Because the draw on liquidity is freaking down here. Don't be trying to grab liquidity when there's an obvious target right here. Now I got to make up some of my losses. What do I got for losses here? $1,200. See, Mags, it's the truth. It's the truth. I mean, I've done it so many times. You have to just stay away. I mean, like, go back to the fundamentals. Fundamentals are discipline and patience. Chasing is not fundamentally the right move. Like, here would be a chase. Oh, is it going to go? Oh, am I going to get in? Is it going to go? It wicked the low. It should go. Why isn't it not going? And then you finally get moves like this where it actually hits for you. And then you're like, oh, well, it's going to do it every time. Well, it doesn't do it every time. It doesn't do it every time. So it is safer to stay away from that kind of crap to preserve your capital. I mean, I have not done a single trade on my cash account, which I mentioned. I'm not. Dude, it is like the biggest slap in the face. It sucks. It sucks. But, okay, now that we hit this level, we can reasonably look for along the other direction. Okay, we have a 30-second. What do we got for the 1 minute? There's no opportunity for the 1 minute. 30 seconds, too small. I don't like it. I would wait a little bit. But we have this nice liquidity sitting right here. We have some nice liquidity sitting right there. Two standard deviations from this manipulation move. We can say that 2.5 is right at the low of the daily fair value gap. I think we have lower prices. All right, here's a close above, but we have a small fair value gap, tiny right there. Probably a gem in it. I would be okay with taking something like this. I would be okay taking something like that. It closed above, nice risk to reward. And we have nice liquidity. The downside to taking an entry here, here's what happens. When you miss it like that and then you take an entry like I did, what happens? Well, now my potential drawdown is much larger because I took a high position. That's 20 handles for a drawdown that I could have by holding this position if it was going to have some type of drawdown. That's the risk you take by taking a higher entry. It doesn't mean it's wrong. It just means you need to accept the risk, right? So the target is this high right here and this high right here, which I like them. But you're just accepting more risk by not taking your initial entry, which should have been down here. Okay? And it still could go lower if this level down here is the draw on liquidity. So I know that the trade ID is invalid as soon as we close below this fair value gap, which, because I got in so high, it's a lot of drawdown. I don't like that idea of drawdown that high. But let's see what happens. All right. Let's see if it moves here. Nope. And there is the blown account or an eval account, my friends. That's how easy it is to blow an account when you do not use patience. That's easy. Now, the trade still worked, but because I took a higher position, my drawdown caused me to get out. Also, I oversized on the position. This is still a live trade. This trade I'm confident this is going to work out now based on how many times we've gone into this. But because of oversized, because of previous bad trades, because of whatever it may be, my drawdown was a lot larger. And you just hurt yourself in the long run by taking improper trades. If you miss a trade, be patient. There's the invalidation of the trade. You want to get out of that trade right now. 100% get out. Do not be in that trade. Why? It means that we want to move lower. So right now, I would not be looking for long moves. I would only be looking for short moves. Even though we hit this, I would be looking for short moves. Because it's clear to me that the draw is to the downside because of how many times we have not ran the liquidity when we closed above an inversion, and we've closed below a new inversion to the downside that ran liquidity. So there's a high probability this is going to run. And if it runs, then we just have to wait for the target. What's the target going to be? Once it breaks this low, you want to move your stop to break even and take some profit and get out. That's really what you would want to be doing. Any questions on that kind of stuff, guys? Hopefully this is helpful. I'm trying to give some educational content in this that helps you make better decisions in the long run, because that's ultimately what's going to help you make better decisions. So we should run this here. Let's see if it wants to do it. See how it's being so like finicky? There's a push. Okay, well, I did take that short on my cash account because, as you can obviously see, bearish price action, bearish, bearish. Again, we had a close below, bearish price action, took that for about 15 handles. To me, that one was worth taking on my cash account because I had evidence that price was continuing lower. We just saw the bullish inversion fail. And if that fails, what does it mean? It means either one of two things. Either we're in consolidation or moving the other direction. Well, in this case, we moved the other direction enough to take some profit. My next video that I'm going to be coming out, guys, is the next video in a series. I'm doing a series called the Essential Trader. The Essential Trader series, which is all the essential ICT concepts that you need to fully understand. When you start putting all these pieces together, you're able to begin to read the market more clearly and get an idea of what's happening in the market. So I'm going through each of these PD arrays. I just finished the fair value gap video, and that is up if you haven't watched that video. I'll be putting up today or tomorrow. I'll be explaining, I'll be building off of that fair value gap video by talking about inversions and my inversion strategy. Then I'll be going into order blocks, change in state of delivery. We'll be talking about internal and external liquidity. I've mentioned most of those things here in this video, but we'll be going deep into those, giving you guys clear understanding of those concepts so that you can begin to read price more efficiently and clearly. And so you can just put language to what you're seeing. That was my biggest aha moment was when I was trading and I began to put language to what I was seeing. It was just so helpful. So I want to give you guys the language so you can talk about and you can see what's actually going on in the market. Doesn't mean you're profitable, but it's one step closer to being able to make better decisions because you have a language for it. Now you can say, man, I've seen this 100 times. I don't know why or what it's going on. Well, I'm going to give you an answer, right? We're in a market maker sell model. We're in the 10 to 11 time frame, and this right here is the silver bullet. That's the silver bullet ICT talks about. Why is it always between 10 and 11? Well, typically between 10 and 11, you get your market maker sell or buy model begin to play out. So right here, 1028, there you go. There's one right there. Here's 1016. Here's another one right here. That was another one for an opportunity. Here's 1008. Here's another one right here. Now, does it always happen every day? No. But if you're seeing a market maker sell model, there's a high probability that those fair value gaps, the silver bullet, works. I just don't trade it. I don't trade it or look for it. That's why I'm talking about it post price action, because the language that I've developed for myself are breakers and inversions. So I'm not intentionally focusing and saying, where is the silver bullet? If you want to trade the silver bullet, well, then intently look for that in the price action by identifying the market maker sell model, look for that fair value gap within the model and begin to take it, okay? That was a lot. I feel like I taught a lot. I feel like I gave a lot of insight there. 4-hour candle open. What do we got, John? What do we got going on? 4-hour candle open. John likes the 4-hour candle open, guys, which is part of his strategy that he uses. So where was the 4 candle? That was right here. That was the 10 o'clock candle open. And it, what is the 4-hour candle open? Open high, low close, open low, close high. So what I hear John saying is that we opened here, so we're going to close down here in relation to this price action. Yes, 10 a.m. expansion. It's going to move one way or the other. Your goal is to identify which way it wants to move, right? No, I didn't mention that, but I have the line there put out already. So we have a 4-hour fair value gap sitting right here. We're in the next macro time. We have the swing high at this point, which on a lower time frame will be a breaker. So if we drop down to the 1 hour, that's still a down closed candle. I do not prefer to use down closed candles. ICT does not use down closed candles for his breakers. So this could not be a breaker on the hourly. Let's see if it is on the 15-minute. It's still not a down closed candle on the 15-minute. So we would not want to use that either. Is it on the 5-minute? And again, it is not an up close candle. It's a down close candle. So if we're using this for a breaker opportunity, we would need to go to the closest, and the 4 hour is just probably a little too high for me for breakers. I'll probably go to the 1 hour and I would use that level right there. It doesn't mean it's going to get down there, but it's also overlapping with this 1 hour fair value gap sitting right here. Now let's see here. Are we in discount? This is the big question. Is that discount? It is not. It is not discount. I honestly would have wanted to see equilibrium to be above this breaker, because I want to see it reach down into discount if it wants to go higher. That's what I would have wanted to see. So on a higher time frame, this is we're still in premium. So if we're in premium, I want to go short in premium. I don't want to go long in premium. We're talking higher time frame, 4 hour, 1 hour analysis here. This is still shorting potential because of where we are in context of this price leg. Jordy, thanks for coming, man. I'm glad you're here. John, if we watch for sweeps of the 8 or 9 a.m. 1 hour candles, this typically shows you the 10 a.m. candle expansion direction. Yeah, I saw that exactly what that was. So here's the 4 hour. So we have the 1 hour sweep. Are you talking about, you said 9 a.m.? Oh, wait, the 1 hour, excuse me. So here's the 8 and 9. We mentioned this. I think we talked about this earlier. Here's the sweeps. 1, 2, 3. Those were the sweeps. So John's saying after you see sweeps like this of grabbing liquidity like this, it tells you that the 4 hour will run the other direction. We are setting up for a huge, beautiful Friday expansion off the daily. Bullish breaker to the upside for NFP. This is so clean. So you are looking at, John's looking at a 4 hour breaker up for tomorrow. I think the level here, look at this, guys. If we look at the 4 hour, who is mentioning this? I think it was it BF? I think it was, no, BF. No, it was Scalpin ICT. Okay, look at this, guys, on the 4 hour. Here's why we have to do multiple confluences. Okay, if we look at this, price leg from the swing low to the swing high, look at where equilibrium is at. Okay, now if we want to do the breaker according to how ICT does it, it's the highest up closed candle. That is this candle right here. And look what it overlaps with. It overlaps with equilibrium. So I really like this level more than I like the other levels. And that level is sitting at 19,227. I like that for the breaker. Now, you can go down to lower time frames to see how that looks in lower time frames. And that is, you got a high, or you got a high, low, higher high, or excuse me, you got a low, high, lower, low, which this is a nice bit of price action we should see. This is the bullish breaker John's referring to that I also like. I also agree. You can use multiple ways of trading and you can come out with the same conclusion. You can. I don't use the 4 hour 10 o'clock candle as part of my model, but John does. But it still gives almost the same information that I would be looking at when I'm referring to breakers, order blocks, liquidity, and we'll just have to wait till tomorrow to see what happens. NFP's right at 730. We're gonna get some high manipulation. We ran this low right here that I referred to, and it came into the 4 hour. So we can say that that was the target. That was a nice target right there. This was a great today. This was a great stream. Yeah, this is great. We took some educational losses, which I hope those were beneficial to you because that cost me $30. I didn't want to lose those, but I held on to them longer to explain the reasoning behind them. I would have cut those way sooner, but it just worked out to explain what was going on. I like this 1 hour. I like where the 1 hour is opening with the 1 hour time frame. This is how you can use higher time frames to get the idea, and then you go down to lower time frames to refine your entries, refine your targets. So if I'm refining it, I'm looking, this was the 4 hour breaker. Well, as I go down to the 1 hour, I like where the 1 hour sits better than where the 4 hour is sitting, right? You can do this all the way down to the 15-minute and keep going, right? I still like where that 15-minute is sitting. Yeah, I like the 1 hour and 15-minute. I think that's sitting pretty nice. So now that we ran into the 4 hour, I'm going to remove that, and the next idea and target is going to be the 1 hour breaker. Now, I'm not taking an entry as soon as we hit that 1 hour breaker, but when it does hit, I'm dropping to a lower time frame to see what opportunities we may have. Yes, Mags, I do get payouts. As long as you're following the rules, you will get payouts. They've paid out more than any other prop firm. You just have to follow their rules. The one that most people get caught up on, there's two of them. Trading news. Do not trade news. Just stay away from them. Stay away from news trading. If you do that, you're going to have a much better opportunity to get payouts. Number two is do not, I repeat, do not average down. Apex will allow you to average down once in a specific trade. So if you go short, if you're going short here and it starts going up against you and you decide, well, I want to average down my position, you can click that button only one more time. So you get 2 clicks. If you short. After that, if you take another one, it will count against you from getting a payout. So don't do that. It's better just to close the trade instead of trying to average down. Apex is looking for long-term consistency. And long-term consistency, they have found, that's why they have a rule, is that averaging down, or a majority of people that do average down end up taking losses from those positions. So they limit that to just one opportunity. As long as you do that, and then you don't trade news, and then you don't go really heavy on a trade and you make $4,000 on a given trade, but a majority of your trades are only $200, you will be able to get payouts. That last one is referring to consistency. They don't want giant wins followed by, tiny wins. They want $200, $300, $200. It's consistency. It's staying around that same level consistency. As long as you can do that, you will receive your payouts. And honestly, I prefer their rules because it makes me a better trader, right? It makes you a better trader. It makes you take more consistent type setups, not just playing and clicking a button. They want to see a pattern in how you're taking the trades. And if you do that, you will get payouts, 100%. No doubt in my mind, you will get them. Most people just complain that they're not getting payouts because they're not trading. You see on social media everybody complaining about Apex, that they're not getting payouts, whatever. I guarantee you, if you were to ask them, well, show me your trades, you would be able to find a reason why they didn't get that payout. 100%. 100%. There's no doubt in my mind. All right, looks like we're hitting the hourly. Boom, there's the hourly grab right there on the 15-minute. Nice big drop there, folks. I really like that fair value gap. Look how that fair value gap just played beautifully out on the direction of where price was going. Came up in here, we went lower, tried it again, went lower, wicked higher, grabbed more liquidity, then it dropped. This is a beautiful, if you guys could take a picture of something, take a picture of this. And I'm saying this to myself, to be honest, because this happens a lot. Before this, I was looking at price. I was looking at this thinking, oh, we should go long. I wanted to see higher prices, right? There's two giveaways in this. Two giveaways. These equal lows. This is education for me, guys, because I should have caught this. I would have played the downside a lot more if I understood what I'm sharing with you, or identified sooner what I'm sharing with you. Okay? It would have been this breaker, high, low, higher, high, breaking lower. I did call that out. I did call out shorts, but this fair value gap is where price played in a lot. And when we came lower and came back up to it, and on the 15-minute, where did we close? We closed below the halfway mark of that 15-minute gap. Whoops, that's not what I wanted. I just wanted to move once. And the next candle opened below and closed below that fair value gap. I should have looked at those two. I could probably wait one more. If you waited one more, you would have missed your opportunity. The 5-minute was my indication. Remember I mentioned that? I was just a little conservative on wanting it to hit that level right there. That's really what I was waiting for. I was waiting for price to come up to this level right. Was it right there? Yeah. I was just a little conservative. I was waiting for price to reach that level, and we didn't. Because we didn't hit that level, I didn't get my setup. I didn't get the entry to go short. I wanted to go short. I just didn't get the 5-minute change in state of delivery tag, or what do we call it? A immediate retracement on the 10:05 candle. When we closed down here, I really wanted it to come back up to this level, and I would have went short 100%. We didn't get that. Instead, I took a small trade right here when we went up quickly, grabbed that liquidity, and went down. And I sold right here. So even as I'm going through this, I'm seeing things that I could have potentially done differently. We have this breaker sitting right here. I marked out, and it hit to the point. I think this is the biggest point I'm making right now, is I had my ideal target, but if I would have identified this other confluence that hit to the tick and I saw it close here, I should have just held it longer. I got the 30-second move out of this, but if I would have paid attention to that it was reversing because of this breaker, I would have held for a longer move. That's what this is telling me as I'm reviewing my price action here. BF, ES leads upside yesterday, bull trap today, ES leading downside almost at CE of DR and equal lows. Mags, I've always see beautiful setups hindsight. In real time I see them, but I get gripped with fear and miss it, and then like a fool chase price. Been working on my psychology. Yeah, working, I mentioned this yesterday, go back to the fundamentals, do not chase price. Okay, do not chase price. Tell yourself there's other opportunities. If you have to get up and walk away, get up and walk away, right? You have to. You will always see hindsight. I was the same way. I still see price stuff hindsight that I'm like, man, I wish I would have saw that. Allow yourself the time to develop as a trader. Allow yourself time to call out the ideas without taking the trade and saying, all right, I think this could be one, and just put a note on it. Don't take the trade because you're gripped with fear. Tell yourself, I'm not going to take this trade, but I'm going to take a paper trade. I need to build that confidence. And the more you do that, the more you'll become confident to be able to take the entry. Losing is part of the game. You will take losses. So you have to take risks. You just have to manage those risks, okay? God has put trading in my life, I guess, to develop my character after working in corporate for 15 years. It's in trading. I come face to face with my inner demons. Patience, discipline are key. Hands down, I have not done something that is more difficult than trading when it comes to personal development. Trading is all about personal development. You have to be committed to developing yourself through not taking trades, being patient, being disciplined, taking only the setups that you know you're supposed to be taking, and getting rid of all of that, the fear, the FOMO, the fear of missing out. You have to. It requires so much, and you will grow more as a trader, not because of the strategy you know, but because you can sit on your hands. When I realized that, I'm not even kidding you. When I had that realization, when it switched, it clicked, and it was like, man, I'm okay not taking a trade. I have not taken a copied eval trade yet today, and I am 100% okay. In fact, it feels good. Before, it was not that way. So your goal is to believe that it's good for you without the feelings. Because when it does happen and you realize, wow, I'm glad I didn't take a trade, then it switches. Now your emotions start catching up to the decisions you made regardless of how you were feeling. Now I'm like, even though today was a great trading day, great price action, I made the decision that I'm not going to do my eval account. Or I made the decision I'm not going to do my performance accounts. And because of that, I've just decided, and I know that it saves me in the long run, and I'm okay. There were some great moves today. I missed great moves. It's okay. I'll be back tomorrow. I'm going to be patient. I'm going to take just A+ setups. I hate losing money. I'm not afraid of losing money. I hate it. And I know that most of the times I lose money is because I'm making stupid, emotional, illogical decisions that I should have not have taken. Yeah, do I still have that on here? I don't think I have it on here anymore. The standard No, I don't. I don't think I did. Let's see. It would have been right here, right? Standard deviation. Targets. 4 hour. There's four standard deviations right there. So when you have manipulation is usually 1 standard deviation or 2.5 standard deviations from this manipulation. So if we take this, let's see if that works out. I don't use it as much. I wish I did or do, and I probably should do more of it. I want you to pay attention to this because this is hitting on point. Okay? You can use the wicks or the body. But when you have a manipulation leg, this is our manipulation. This was the manipulation right here. Look, and this was the manipulation for the big move lower. These two down close candles right here was the manipulation for the future manipulation leg that we see right here. But the manipulation leg usually will run 2.5 standard deviations. So here's 2.5 standard deviations. That is for the manipulation move. 2 standard deviations up is the manipulation move. Now we take the manipulation move for the real move. It should run 4 standard deviations, which is way down here. Boom. Now the trick is being able to identify what's the manipulation and what's the real move. That is the hardest part, right? You may have thought that this was the real move and you would have been targeting 4 standard deviations and it never got there, right? The trick is being able to identify what is the manipulation and what is the real move. And then when you can obviously see it in price action, the numbers work out almost every time. So I think the reason I don't use it as much is I haven't mastered being able to identify where the manipulation move is and where the real move is. All right, guys. Well, I think I'm going to call it a day. It's good trading, good educational content. I will be on tomorrow again doing some live streaming. Check out that code if you don't. If you do use Apex, I'd greatly appreciate it. Hit that like button. It's free. It's free. Thanks for watching, guys. God bless you. Stay safe. Sit on your hands when you don't have a clear setup. Be patient. And we'll see you guys all tomorrow.